In this video, traders, we're going to look at trading gold against other currencies other than USD, which is what we normally trade it against. Stay tuned. Hey traders, warm welcome to you. All right, so we often trade gold against USD because that's generally how it's quoted. The price of gold is quoted in dollars, and we don't think anything of it. We're just trading gold against a currency. But one thing to think about, guys, is we're actually trading a pair. Just like if we're trading a Forex pair, we're buying one and we're selling the other. In the case of XAUUSD, we're buying the gold side of it and we're selling the USD side of it. And that's fine, but it's not really suitable sometimes under certain circumstances, and we can't really fine tune it much more than that. Because imagine if you're buying XAU and you're buying USD, if they're both strong, then it's going to go nowhere because you're trading basically a differential between the two. If they're both ripping, i.e. the price of gold is rallying, US dollar is rallying, the price of XAU USD as a pair is going to sit where it is. You really need one to be strong or stronger than the other, preferably in a best perfect world, one to be super strong, one to be super weak. Then you get pressure from both angles of the supply-demand balance, and that's when you get those really ripper moves. But most places don't offer it. You know, if you go to a normal broker, you're trading XAU USD. However, guys, they have more to offer. They allow you to trade XAU against all these different currencies. So you've got GBP, AUD, Euro, and CHF. So what does that mean for you? So what that means is, let's say you've got a thesis, you've got an idea, and that is, okay, I believe that there's going to be lots of money coming into a safe haven. I still believe gold's got its safe haven status. Money's flowing into that. I expect the price of gold to rally over the next month or whatever time period you're looking at. However, you can now fine tune it and go, right, well, if I'm going to buy gold against another currency, I want to pick the weakest currency possible. So you can now go to your Forex pairs and you can go, which one of these is the weakest currency? And I will pick that one to place the trade on, because effectively you're buying gold and you're selling whatever you've got on that side of the pair. So whatever currency here, if you can find the weakest currency and you expect that weakness to continue, that's going to be a far better trade for you to buy that one than it is to buy XAU USD. Used to saying it in Forex terms, it's XAU USD. So, you know, if you picked and you did a bit of due diligence and went, right, let me look at all the GBP pairs, and you said, well, you know what, GBP is really struggling against all these pairs. I think this is a really weak currency. You might select that, extract that one out and go, right, well, actually, I think to get the best movement from this, to get the best risk-reward ratio on the trade, to get the best kind of profit from the trade, or potentially the least risk, assuming that everything still goes as you planned it to, I'm going to pick XAU GBP. I'm going to go long on that one, because you think about the supply demand, like we always think of it as like a seesaw, if you like, on a pivot in the middle. In the case of a Forex pair, or even, you know, a pair like this, we've got commodity on one side and a currency on the other. Let's say gold is strong, that's enough, even if that's neutral. Imagine a seesaw, someone suddenly becomes lighter, that's already going to tip. Now, if you have someone with pressure on the upside, i.e. lighter, and you have a super heavy guy here, you're going to really quick, like really quick move. So you can imagine that supply and demand, then all of a sudden you've got, wow, strength from gold pushing up and weakness from GBP pushing down. That's going to be far more effective than just the strength from gold. And of course, it's going to be a different ball game from both being strong, because if they're both as strong as each other, the price isn't going to move. So this allows you a little bit of extra flexibility, guys. It allows you to fine tune your gold thesis and the trade idea you've got on gold a little bit better. It just gives you a few more opportunities rather than just going traditionally to the XAU USD type trade. And actually, you might be right on your call on gold, but USD might just be ripping and strong, and you're not really going to make any money. In fact, you make no money on it. And if the worst case scenario, if USD is outstripping XAU in terms of strength, you're going to lose money because it's a ratio you're trading. However, if you're careful, you take a little bit more time to pick the weakest currency, as if you're buying this pair, by the way. If you would sell it, shorting it, you'd flip it around on its head. If you take your time to pick the weakest currency, then you're going to really kind of get real acceleration in the chart, if everything kind of goes to plan. And you're going to get way better outcome from your trade. So go in the link in the description below, guys. Check out for yourself. If you go and look at their website, you'll be able to see exactly all the spreads and stuff that's involved with each of these. So if you want to go up and demo, check it out, have a play around with it and see how it all works. If you're into gold trading, it's probably a good idea to open a demo, perhaps a few of these different tickets open up a kind of demo trade and all of these of a similar amount, and monitor it and just see how the difference is over the period of time you trade. If you trade over a couple of weeks, monitor it a couple of weeks, a couple of days, whatever, because then you get to see exactly how it all changes. And really, if you'd picked the right one, and assume you can do that in the future with your trade process, how much more difference it makes to your bottom line. So guys, I'll link them in the description below. Whatever you're doing, whatever you're trading, keep your risk managed. I'll see you in the next one. Take care. Bye bye.